Hi learners, in February 2001, the Government of India announced a ban on advertising by cigarette companies and restrictions on the sale and consumption of tobacco products. The declining sales of cigarettes, the proposed ban on advertising, the increasing anti-tobacco campaigns, and the experience in developed countries seem to suggest that tobacco would no longer be a profitable business in the future. Consequently, ITC decided to diversify into non-tobacco businesses. So this case study today explains the ITC Diversification Strategy in India. Before moving to this video, just a humble request to you all that if you like this type of content, please like this video. It would indicate to me that I should continue to make these type of videos. Also, do not forget to subscribe the channel in order to stay updated with the upcoming and interesting case studies. Also, I have given some case study link in the description of this video. With that being said, let's jump into this video. ITC over the years has transformed itself into an umbrella group that offers a diversified and various product mix. ITC currently focuses on 4 business groups. One is FMCG, the other one is hotels, third one is paper and packaging, and the last one is agribusiness. Predominantly being a tobacco company, ITC is steadily gaining success in increasing its earnings from its non-cigarette diversified businesses. It is also making structural interventions and leveraging synergy of diversity between FMCG and other businesses in order to enhance operating efficiencies and further expand FMCG growth engine. As we all know that ITC is the market leader in cigarette in India with a wide range of strong brands. 3 of its brand, which is Goldflake, Wills and Scissors, feature among the top 5 FMCG brands in the country. ITC has an 84% market share in the organized sector in India. That's almost borderline monopoly status. So it is clear that the company has everything going for it. Its only real risk stems from the government's tax regime. After all, cigarettes are sin products. The government can tax them and get away with it, all in the name of public interest. So because of these reasons, ITC made a foray into other industries like the luxury hotel business in the mid-1970s. But luxury hotels aren't like cigarette companies. They only cater to a small group of customers. The business are highly seasonal. In fact, the economies of running a luxury hotel chain is so messed up that ITC barely makes a return of 3% on all the capital they have deployed in creating this business. ITC has one of India's finest hotel chains under the brand name ITC Welcome Group with around 60 hotels approximately in India. Later, ITC also ventured into edible oils and financial services at one point in time, but these ventures never really took off and the company shelved it away a couple of decades ago. That means we are left with one final alternative, which is the FMCG business. In 2001, ITC made an entry into branded packaged foods business and rapidly expanded the portfolio to include confectionery, staples, and snack food segments. They were challenging Hindustan Unilever and Procter & Gamble with their own line of personal care products. ITC also began competing with Britannia and Parle-G by introducing their own line of biscuits. They even laid siege to instant noodles and confectioneries, going up against the likes of Nestle. The company is also into marketing of safety matches and incense sticks sourced from the small scale and cottage sector. Moreover, the lifestyle retailing business of ITC was established in the year 2000 through the Wills Lifestyle chain of exclusive specialty stores that sells apparels and accessories under the Wills trademark. ITC also sells men's range of apparel under the brand name John Players through exclusive branded outlets as well as more than 1,500 multi-brand outlets. ITC has a presence in the IT industry as well through ITC Infotech India Limited, a wholly owned subsidiary based in Bangalore, formed in 2000. ITC Infotech offers in-depth domain knowledge in the areas of manufacturing, hospitality services, retail, FMCG, paper and packaging, and commodities to its clients. The company has established Technology Center of Excellence to deepen capabilities and incubate cutting-edge technical competencies. Through its wholly owned software subsidiaries in the United States and United Kingdom, ITC Infotech services multiple Fortune class clients. ITC also has leveraged its paperboard and packaging business to market branded stationery and greeting cards. The products under the paperboards and specialty paper business include coated and uncoated boards, writing and printing paper, craft paper, and specialty paper. The company is the country's largest converter of paperboard into packaging for a variety of industries. In the paper business, ITC's strong backward integration in the value chain and its technologically advanced plants for packaging and printing enabled it to export quality product at international prices. The company also focuses on exports of soya meal, rice, pulses, coffee, black pepper, edible nuts, processed fruits, and marine products, etc. Agri exports contributes over 60% of ITC's total foreign exchange earnings. The business also sources high-quality wheat for the company's branded packaged foods business, leveraging the eChowpal network, which currently comprises around 6,300 installations, reaching out to over 3.5 million farmers. ITC pioneered the cultivation of cigarette leaf tobaccos in India and is currently the largest buyer, exporter, and even the processor of Indian leaf tobacco. Thus, ITC's diversification strategy involves innovation in its business models to synergies in building the economic, ecological, and social capital as a unified strategy. FMCG major ITC will continue to diversify into new areas, with agribusiness playing a key role as a part of its India First strategy, under which it aims to create 10 million sustainable livelihood by the year 2030. Though ITC continues to invest and grow in its traditional business of cigarettes, it is well equipped to beat the intense competition in the non-cigarette consumer business and the agri space due to its large distribution network and the vast experience in handling the cigarette brands. With all this being said, its diversification attempts have not worked out well as most investors expected. Its cigarette business isn't exactly harboring untapped potential. Its capital allocation strategy isn't all that solid, and its recent share price has reflected these ambiguities. Thank you everyone for watching this content. I hope you like this video. Please give it a thumbs up if you like it. That would mean a lot to me. And do not forget to hit the subscribe button.